Hello active traders, I'm Ken Calhoun from Day Trading University and TradeMastery.com, coming at you live with beginner strategies for active traders. Now let's take a look at the 2-day 1-minute candlestick chart. It's a very good basic pattern to learn, and we're going to take a look at it. But just remember, before you can run, you've got to walk. Just like playing saxophone, you start off with something really basic. Now, like playing something simple like that, you want to start off easy when it comes to identifying chart patterns that work best for active traders. Let's take a look at how to use the 2-day 1-minute candlestick chart as a core tool. I've used this for over 20 years. Let's take a look at how it works. Now the first thing you want to do is make sure that you've got a look at 2 days worth of price action with a 1-minute candlestick chart. And the reason is a lot of times charts that did a really big run in the previous day may also take off on the day after. So what you're looking at doing is setting up your chart so that it shows 1 minute at a time, and that way you can take a look at the range, the previous day's open, high, low, close, which is important. You know, where did the stock trade yesterday? What was the high of the chart yesterday? Where was the low? When it runs, how far does it run? And is it going to run like that in our current day? And if so, how do you put an entry? How do you trail a stop? How do you manage your exits? And so forth. So the 2-day 1-minute chart's really good. One thing we may want to take a look at is the types of charts that are highly volatile. For example, this GREE comes to mind. Here's one that's racing up as we talk. Now just think, how much money could you make if you had bought, just even 100 shares at $22 and held on to it for a little while? Now it's up at $28. That's 6 points. 6 points, or $600 you could have made for every 100 shares of this stock that you bought today. I wish I had traded it myself right now. Anyway, but I'm recording this for y'all, so take a look at this. Now what you look at on this chart setup is 2 days worth of data. This is yesterday, this is today. Yesterday it didn't do anything. Today it really took off on high volume. The only other indicator you need on your chart other than price is volume. Do not have the VWAP, the value weighted average price, like other people talk about, or any other squiggly lines. All we care about is the 1-minute directional move, and the way you follow that is with what's called time and sales. We'll look at that in an upcoming episode, but for now I just wanted to familiarize you with what a 2-day 1-minute chart looks like. Here's an example with Apple. Now they gapped down. This is called a gap. This was yesterday. It closed at $152 a share. This morning, after they announced earnings that people didn't like apparently, or earnings miss, it gapped all the way down to 147, and now it's starting to climb back up. And you can see this all on the 2-day 1-minute chart. Now, if you'd only used a 1-day chart, which a lot of people mistakenly use, you would not see the previous day's support and resistance levels. You would see something that looks like this, but that's a very incomplete story because it doesn't give you any clue as to what the average range is or previous support and resistance levels. That's why I've been using the 2-day chart for over 20 years, because it tells me, for example, in this chart, if you buy down here, you would expect it to pull back like it is right here at the previous day's low. And so if the main thing is, if you did not have this 2-day chart, you might have mistakenly bought it right here and lost money because you did not see that this could have been the place that you'd sell into. Okay. If you look at other charts, you've got really good volatility for gaps up. This is a gap down chart. This is a gap up chart in X, US Steel. Now this is a company that beat their earnings report, and you can see on the 2-day chart it gapped up because investors and traders find it valuable because it beat earnings, and so it gapped it closed yesterday around 23.5, and it gapped all the way up to 25.5, and now it's on track for a breakout near the 27. So anyway, the 2-day 1-minute candlestick chart is really a very valuable strategy to use because it shows you the size of gaps compared to the previous day, and so much more. We'll look at more in terms of strategies for how to put on entries and exits, but that's a good example of a kind of a beginner approach, or very start for your foundation of active trading is make sure you use the 2-day 1-minute candlestick chart. We'll look at additional strategies coming up. This is a parting thought. I've been a jazz musician most of my life, and it's always a never-ending journey to get better. So much like in trading, you're looking at starting off with some of the basics, like the tune I played at the start of the video, and ending up with something a little more advanced. So best wishes on your journey to personal trading success, and I'll see you with all that jazz coming up in our next episode for our Trade Mastery and Day Trading University active traders. Until next time, best wishes for success in your trades.